Hello. 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 When I hello. When the rain is come up or not? Mhm. Good night. Good night.
Good evening, Miss Smith. Lloyd and I will be joining from my phone until we get.
Oh, okay, yeah, because most persons was just one other person than y'all two. Yeah. Yeah, because I know one person told me she won't be here tonight. Yeah. Yeah. And then one or two persons who signed up, they dropped. Mhm. So, yeah. We'll just give them a couple more minutes before we start. Yes, because a lot of persons probably want to study. Good night again. So I guess,
Good night.
yeah, good night. We'll be doing chapter 7. It's just, I guess, three of y'all, one class. I don't know the other persons. In total, it's 8 persons because quite a few persons had personal reasons they dropped, or yeah. But we will be doing chapter 7 in the book. Retail banking products. Okay, so another thing, let's talk about, wanted to, Miss Price, I didn't have my answer sheet, but I looked and I didn't find the answer to that question that you asked me about. Hello? Hello?
Hi.
Yeah, you both you and Mr. Price there?
Yes, Mom, we're both there.
Okay. Did you hear what I say? I said I looked at the question that you asked me, but I don't have my answer sheet, and so I couldn't locate it. And another thing, when it comes to the true and what was that? Multiple choice. That was the true and false on in the questions. That's multiple choice in the questions that I gave you, all the 100 questions. Remember now, only 100 of those are coming. Some majority of the ones that you all looked at for chapter 4, chapter 3 and 4, I think the true and false for 3 and 4. Boy, a lot of persons didn't do well on the true and false. Yeah, I don't know what happened there, but yeah. So
I
mhm.
I had a question about how the exam will be. So will
Mhm.
the questions and answers, like for multiple choice, they'll be the same on the test as they are on the review sheet? Or will they be changed up, like worded differently and stuff?
No, they won't be worded differently. Mm-mm. They're not.
Okay.
It's just that I say it's only 100 of them, but they're not worded differently. No, they're not. Mm-mm.
Okay.
Yeah, but like I say, on with the true and false, a lot of persons was having issues with the true and false. Because like even the question that says that when bank merges, they don't decrease. When a bank merger, banks don't decrease.
Yeah, they do
Then,
decrease.
right? But a lot of persons probably didn't read the question properly because a lot of persons didn't say that, you know. So also with the intermediary, whether insurance company or investment, they are both none. I think it was depository. They are both none. They are investment companies. So a lot of people said yes, you know. So a lot of questions persons didn't seem to handle well. But like I say, out of the 100 and something that I gave y'all, and the 100 questions are coming. So try your best to do, because remember, the midterm is 30%. Yeah. Any questions, any concerns other than that before we head on to chapter 7?
I have one more question. How do we know what percentage we're at so far before the exam?
Oh, you don't, that, you remember now, assignment is for the whole class. So that 20% is not just for half of the class, that 20% is for the whole class. Yeah. So when I work that out, I add up all your grades together, and then I do my percentage when it comes to the assignment. So right now, the pivotal point is the midterm exam. Yeah. Because remember, the assignment is you have 5 more chapters to go. So it's really that 20% is over that whole, over the whole class. It's not just giving you half at where you at now. So 20% is for the whole, all the assignments. So when I do it where I add up all the assignments and work it from there and give you the percentage out of the 20%. But the midterm, you would know when you do the midterm, automatically you get 100 questions. It's a 30%. It's valued at 30%. So you have 100 questions. You want to get as much of them as you can, because that determines your midterm grade. That is a heavy grade. Yeah, because that's one grade. And then, as you know, the final is another one that determines your grade too. Most of it that determines your grade. So the final exam is 50%. So you know you want to get a good grade to be able, because like I say, unlike the diploma course, the certificate course, the grading is different, because if you get below a 65, you actually fail the midterm exam. That's what it is. So you want to work to get at least, you know, a good score, because like I say, to get an A, that's 90 to 100. To get a B is 89 to 80. To get a C, that's I think 65 to 79 to get a C. Yeah. So the grading score is much higher. Yeah. I know some of y'all didn't have the chance to actually, did any of you had a chance to actually look at chapter 7?
No, I didn't have a chance to look at it as yet.
Okay. Well, it's only 3 persons in class tonight, so. Yeah. But have y'all started to actually study?
Yes, we started studying.
Okay. Because remember, the exam is on Saturday at BIFS. Yeah. But so I'm wishing y'all the best because I guess Miss Dean will just send the exam papers to me. Yeah, because that Monday is a holiday. So y'all have the opportunity to read, at least go over chapter 7. Like I said, only 3 y'all in class today. Yeah. So as you know, chapter 7 deals with products that the banks offer. And most of you would be familiar with products that the banks offer because you have savings accounts, checking accounts. There's some of the services, products that the bank offer. And like I say, any more questions, any concerns about the exam? Any questions, any concerns so far about classes?
Not really about the classes, but where do we park when we go to take the exam on Saturday?
Okay, you know where the parking lot right across from if you're coming, it's facing the hospital, the corner, you know where I think it's the Graham Thompson building, right? That's the parking lot is right there, right, you know where Taylor Industry used to be, that little corner? The parking lot is right there facing the hospital, not when you reach to the light, just before you reach to the light. The corner before you reach to the light, right there's the parking lot. You park in there.
It's a green building. I mean, a green
Oh,
parking.
pardon me?
It's the building. The parking lot is green.
Oh, I know, Jeff. I can't remember.
It's a green building.
A green
I
parking lot,
know.
right? I think the corner name is Victoria.
Yes. Right where RBC used to be on the end of the corner, right through there where I think the tour buses is parked somewhere on the side, but it's a parking lot right there between Victoria Avenue and Elizabeth Avenue. Yeah. Yeah.
Okay, thank you.
Yeah. Yeah. Right there. But it's right there. You could park in there. Yeah. Because when I used to have to teach at nights, that's where I used to have to park. Scary. Well, at least y'all have exam in the day. I used to have to park in there in the night. Yeah. So like I say, it's only 3 of us and y'all, 3 of y'all in class tonight. I don't know what happened. I know one person told me that she couldn't make it tonight. Yeah. But I don't know but the others. So we can I'll just try to go over chapter 7 with and hope that some other person sign in. Not sure. Yeah. Okay. All right, chapter 7. Chapter 7 in the textbook, it talks about, like I say, the products and services, the banking contract. Every bank product includes the basic bank current account. Every insurance policies and every payment card is subject to legally binding agreement. And we know when we open a savings account, they have all these little forms which we don't read, the fine prints. And so when something happened, we say, oh, how y'all do this? But we didn't read the fine prints because all accounts have an agreement, a binding agreement that you have to sign when you open an account between the bank and the customers. Very often the agreement is evident by a written contract containing the rights and the duties of each party to the contract. Typically, the law does not protect the individuals entering into the contract unless they have read the small print. And like I say, a lot of times we don't read the small print. Just like if we have a insurance, we take out an insurance, and what happens? We don't read the small print that says, okay, when you take out this insurance, you know, like persons who commit, I guess, suicide, you'd say, okay, if you committed within 2 years, I think some policy says, and then some people say to you that, oh, you don't get anything, but if you read the fine print, it says you do, if it happens after 2 years, for some insurance companies rather, some. So with anything, there's an agreement in place, so you have to read. That is those terms and conditions that are printed in small font at the foot or on the back of an agreement. But many countries now have consumer protection laws that prevents large organizations such as banks from using their superior bargaining strength and power to write unfair contracts that customers are required to accept. There can be an additional protection available when buyers buying products or services online, but the sensible principle is that you should never sign a contract or click to accept terms and conditions without reading. How many of you read your when you open an account or anything that has an agreement? How many of you actually read it, or you'll just click accept?
Yeah, and I normally just click accept, especially
Yeah,
if it's like an app or something. I just click agree just so I could get through it.
But you never think that there could be a repercussion later.
I'm sure that they would be, you know, but a lot of times it's the same scenario with customers and saving and accounts. What we call the personal financial services agreement. It outlines everything. It's basically the contract between the client and the bank, and it outlines all the features, everything within the account. So, you know, sometimes customers come back with queries, and then we show them, hey, it's in your financial service agreement, right? So, you know, because they sign it, they that's their consent. So there's not much that they can do at that point.
Right, because they especially when it comes to service charges or fees, I'm like, what is this? No, nobody told me this, but like I say here again, because we don't read the fine prints, because we just want to get through, like you say, to get past certain things, so you just click accept. So they just sign. So they're not really, even like a lot of times people don't pay attention, like when they get ATM cards, like debit cards or credit cards, they tell you straight that that is your PIN. You should not share it with anybody else. And a lot of times people, oh, I couldn't get to the bank, so I just gave her my PIN. But they forget, if you put that card down in a place where somebody is accessible to somebody, and most of the time it is your family who do it, accessible to them, either the boyfriend or the girlfriend or the husband or the wife. Oh, girl, I need to take some money. Girlie, give me that number. I gotta go get that money, you know, and then not telling the other party that, hey, you know, emergency happened and I had to go to the bank and I had to use your card. They don't say it. So then when the other person, be it the husband, the wife, the boyfriend, the girlfriend, finds out that, hey, I didn't take the money off, and goes into the bank making a bunch of noise, but y'all debit my account for no reason, or I didn't do this transaction. And then what they come to find out, the one thing the bank have is paper trail. So you could see exactly what happened. They could even go to the camera and call it up and show you who to the camera, who taking off the money. So, you know, so like that, that's why people have to be mindful. And a lot of times people are not mindful. They do little things like that and they forget. And that's where fraud come into play too, because like I say, it's not, or even like when you sign in a withdrawal slip, you know, people, tellers, customer service rep, anybody, you know, and in the world today, we learn trust no one. So and you'd find that a lot of banks, a lot of them go through the situations where CSRs or, just personnel in the bank, they do some fraud and stuff. And so I know back in the days when, like I spoke about this, when we used to have dormant accounts and the signature cards were not actually locked away like they are today. The signature card was just available for any staff, because then that's when you have to go to the little pin and check the customer signature, make sure. But now we technology has changed a lot of that. So then the cards was available, not locked away. So persons used to just go and take the card, carry it home, practicing the person's signature, and taking money. And staff did it. Customers, tellers back then, we called them tellers, did it, So it's really protecting your PIN, protecting your agreement that you made with the bank. Because if you make an agreement and you step outside of it by giving your PIN to someone else, or when you're putting your PIN in, you're not actually covering it up to make sure that it's not visible to somebody else, then it's on you. And we know nowadays there's so much sophistication with how people taking money from the ATM, taking money from your credit card. And as I say, like when you go to the restaurant, or and I never let anybody, or if I go to the food store and they say, oh, I have to go over there, I come in behind you, I have to go over there to the next cashier. I right behind you to the next cashier. Because that's when I know that's what happened to me, when after I used my card at Super Value, and then the next day sitting at my desk, I'm hearing bing, 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 and my card is being used, and I am sitting at my desk. And that happened in the food. That was the last time I used the card, was in the food store. So I'm saying it's like people can fraud in any way, because all you need is the information on the back, and then all you need is the card number and stuff like that. And you could go purchasing online, unlike like with me, with my account at Fidelity, I have to, anytime I'm doing a transaction, now if you purchase on Amazon, they don't ask you for that. But anytime I'm doing a transaction, I have to actually, if I'm paying a bill, I have to actually put in my CVV key code. So, and it changes every time you pay something, it changes. I don't know, is that the same case at Scotia?
Ms. Smith, can you repeat that, please?
I was asking if when you use your debit or your credit card, does the CVV key to the back, does it change every time you use it? Or your loan is just standard?
Ours is standard, but I know that we have some I forgot the term that they, excuse me 1 second, sorry.
Okay.
Yeah, sorry about that. So we just implemented this encrypted technology as if customers make purchases online, it there's an encryption. So the card number would be distorted, and like the what you call it, like all the pertinent information from the card would be distorted. That way fraudsters can't intercept.
Okay, all right. Well, that's good. Like I say, with my card at Fidelity, every time I make a purchase or if I pay a bill, because that's what I pay my bills from, I use my credit card to pay my bills. They put the money there so I could get the points. So the CV code changes every time. So I always have to go and get another. Once I go in, I'll get another code. It'll come up to me here. So that there is safe. But like I say, I try not to use my debit card, because like I said before, debit cards, Visa won't pay you back right away. Credit card, Visa pay you back right away. Yeah, But debit cards, they say that's your money. So the bottom line, because it's your money, yeah, because it's your money, it hold on for me. Yeah, because it's your money, you have to wait a period of time, 45 days before you can get your money back. Yeah. Yeah. Like I say, the type of account, so we'll look at them, type of savings accounts. And all of these, they say savings because we use these, well, current accounts, we write checks, deposit accounts, it's like a savings account, then we have the term deposit account. A current account, a basic account with a checkbook and a debit card facilitates, pays very small amount of interest or none at all. And we know the bank don't pay much interest at all on anything, any accounts now. So I know some banks have current accounts with non-interest payment and some with interest payment. So interest payment often foregone in exchange for free banking transactions that attract no fees. And we know every time you write a check, it's a fee, and then you have to pay a government stamp tax. So, you know, everything is a fee. So, and you know, with checking accounts, now with the new ACH or the clearinghouse, before people used to write a check and say, oh, I don't have to wait till I could wait. I give you that check, girl. But they could say, oh, I give her that check. It ain't gonna go through until like 2 or 3 days. Now, that's not the case anymore. So you find a lot of people have checks going back and returning because it's no longer where you could write a check and it don't get to the bank until 2 or 3 days. So, and we know a lot of people is to kiting, and that's what we call when you write a check and you know you don't have the funds, and so you're sending the check, so you're kiting. And I think I mentioned before, I had one person who worked with me at one of the banks I worked at. She worked under me, and her and another girl had a scheme going. The other girl worked at another bank. And so what they used to do is write checks between each other. Okay, I need this paid. So the girl from the other bank would give her a check to deposit to her account. And then she in turn give her the check to deposit to her account. It was just a whole scheme going on. And I was in charge of audit, and she worked with me, and I realized, I picked up on it, and I realized, and when we did the investigation, having to pull all the checks and see the dates and stuff, realized that she and the girl was kiting. I don't think the girl lost her job at the bank where she was, but I know the girl who worked with me, she lost her job because management just didn't tolerate that. But I know a lot of people still try to do it. And you know, when you have a current account and you have a return check, you know, that's a hefty fee being charged on that check. So I don't know what it is. So what is the fee now, Mr. Price, for, I know you work in operations, not sure if you're in that area, that you would have to pay if a check is returned.
Well, I believe, I want to say return fee is $25, and I believe that's the fee for return checks.
And then that VAT added onto it. So I think it's like 28 something or something like that. I try to remember. 27 something. Yeah, I believe. Yeah. So, and I don't know if any of you ever had an opportunity to go and, like, sometimes you go in some shops and you'd see them have the people checks stuck up there saying return check, NSF, NSF. And they have the people check on top of the wall showing customers who came to them who have returned checks. Yeah. Then we have deposit accounts. There's a savings. We have different type of savings accounts because you can have a savings, an ASU savings. Some banks have where you can just make a deposit and the savings get run off for 6 months where you can't touch it. You can deposit a certain amount and they call it an ASU savings. And then you have other banks. I'm not sure if it's still around. The Christmas Club, I know BOB was one of them who did it. Finco used to do it too, where you have a Christmas savings where you started in January and you can't withdraw from it. You can only deposit. And at I think it's the first week in December, you're able to get the funds from it. And the interest rate is a little higher. I'm not sure if it's still around, but because I haven't seen Bank of the Bahamas posted as much as they used to before. And then we have term deposit accounts, or they say term savings, or we can call it a fixed deposit. This is something where you put money in and you can bargain for the rate according to, I think we talked about that last week, according to the dollar value that you're putting up, you can bargain for what rate you want to get. And like I say, you can be a preferred customer because you want a preferred rate. I have 300,000 to put on this term deposit. I want a preferred rate. You didn't come and giving me which y'all is give on 300,000, 2.1. No, I want 3%. And if the bank is really in need of funds, because the bank uses depositors' money to make loans. So if the bank is really in need of funds, the bank will bargain with you and give you a preferred rate, a 3%. So sometimes you can just bargain for, what you want. These accounts fulfill some of the basic functions of money for all depositors in that offered easy access, a store of value, a medium of exchange, like we talked about before when it came to money, M1, M2, M3. Because they are able to transfer funds between accounts and to access these funds using checks, debit cards, automatic teller machine, ATM, the internet, or even mobile phone, depositors do not have to visit the bank to withdraw their funds in cash to use them to purchase. And we know that is, the new thing now is, hey, I can do online banking. So I can automatically transfer from my bank to your bank. Once I have all your banking information, and I can go from there. Okay, you bank at Commonwealth and you bank at whatever branch, I can go from there and just add you to my online banking. And once I've added you, I can go in and then just go to your bank and put in my information, what I want to send to you. And like I say, the load is sometime, I think 11, 2:30, 4:30. And so once you get it within that period, sometimes as long as your branch posts on a daily basis or when they get the load, then hey, it'll hit your account. If not, you got some banks, you don't get the money until 2 days after it's been transferred from another branch, from another bank, yeah. So there's several reasons why people save. People save for future expenditures. Customers have often very important reasons for saving. People save for holidays. Do people save for holidays around the world today? Especially in the Bahamas. Do we save for holidays, weddings? Do we save for it?
No, we got loans for them things.
I can imagine how much people in the bank. Girl, I going away for August. Girl, we going for a week. Lord, them hotels so expensive. Those tickets so expensive. I could tell anybody. I still in Canada. I couldn't leave because when I was coming here, I changed my airline to get here earlier, but didn't know that I had to go to Air Canada and say to them that I changed. Please don't. Gee, after I was a no-show, people canceled my ticket. I hear me on Saturday Sunday trying to check in. Things say, I ain't get nothing for you. And I went to the airport here. The customer service rep said, oh no, they canceled your flight. And believe it or not, to come back to Nassau on a one-way ticket, I had to pay $700 US just to come back home. A one-way ticket. So like I say, traveling is very expensive. So people go and they borrow money for holidays, a deposit on a car or a home or wedding. I could see I ain't going to borrow for to put a deposit down on a home because I put myself in double trouble then because we have a lot of people who do it, you know, and you have a lot of banks who do it because I remember the bank would say, okay, we will lend you this amount to get a home. And then we had a company who's billing the home would say, okay, we can inject this amount as your down payment. So you getting double bills because you have to pay the company that is actually billing the home, and then you have to pay the bank. And so people, we don't save. And the one thing as parents, a lot of times parents don't teach children to save. So that's another thing. So if from small, if we practice it, and try to make sure that we say, okay, I have a son. Okay, this your little piggy bank. This your piggy bank. Okay, here, I give you $5 a week. Here, put that up, put that up. And that they're teaching them to save. And when they get a certain amount, you take them to the bank. I know Scotia, you could open an account for a child. Because I know a lot of banks say you have to do it in trust or it can't be open like that. I'm not sure, but I remember back in the days, I think my son, Scotia allowed you to do that. Is that still a practice?
Yes, we open minor accounts. It's just that
Okay.
either the parent or the legal guardian would have to sign until the child turns 18.
Okay, all right, that's fine. Yeah. So it's good to teach children to start to save now because other than that, the cycle continues. Girl, go to the bank. Parents who will be like, your child just get a job on the BDF or the police force. I need a front room set. I need a bedroom set. Or sending the child to go put themselves in debt just to get these things. And parents do it, you know. And then, you know, education. A lot of people don't save for that. And like I say, even if you don't save, try and make an investment because that's what I did. I invest in a property and that's how I send my children to college. I bought a piece of property when there was no infrastructure going out to the airport, Southwest Ridge. There was no infrastructure. I bought the property and I waited so long and they still wasn't putting no infrastructure in. So I had to buy a different property and I just kept that one. I say when time for my sons to go to college, I will just sell it so they can go. And that's why people just tell you, invest in something that is going to grow. We would invest $50,000 in a car when we could have invested in a property which will grow because I paid 40 for that. And when I sold that for them to go to college, I was able to sell it for 165,000. So that's what I'm saying. Don't invest in things that depreciate. Invest in something that appreciate. You know, so even if you buy a piece of property in you know, in an area that a lot of people say, oh, why you buy it? Let me tell you, property is always gain value. Back in the days, Cowpen Road, nobody wanted to be caught dead living Cowpen Road. A lot of abandoned cars. It was just not a good area. And I remember someone said to me, I was looking for a property, and they said, oh, I have one in Cowpen Road, it's an acre. And they was going to sell it to me for $1,000 for me, where there's no vision, the people perish. And I didn't have no vision, so I didn't buy the property. And now look at Cowpen Road. To buy a property in Cowpen Road, now you're paying at least $60,000, $70,000, $80,000. You know what it is if I did actually buy the property, but I didn't. You know, so always invest in something that appreciates. And like I said, y'all are young. Try to invest in if you invest in shares or whatever, mutual funds, y'all young. So y'all could take the risk. So y'all could invest in high risk. Like I say, when you're getting older, you don't want you don't even want moderate risk. You don't want no risk at all, you know. So, and then some people say it's just for emergency, like sickness, something happened to the car, something happened to the house, you know, it's just, or just say for a rainy day, you know, some people do that. But like I say, back home in our Bahamian people, we just we just like loans because the bank make it so easy accessible to us. So we be like, oh, I'm gonna get a loan. I getting a loan. But if we, and as I say, savings is not, oh, I have to save $500 a month. And then in that same month, you're digging in it, getting $300 of it. No, that's not saving. Savings is you saying, okay, I am going to save $100 a month. Consistently, you saved $100 a month, you know? And so even when you're ready to go get a home or something, the bank will look at that and they'll say, well, you know, this person might have saved $500, but guess what? They save enough. They've been consistent in their savings. So that's what savings is really all about. People save for family, you know, older, as a parent get older or become grandparents, they begin to think of providing for their dependents to help them when they choose to buy their own home. So parents sometimes save so they can help their children, even if they only give them a down payment for their home. So parents do that, save for that. People save also to increase wealth, you know. So those who choose to spend less today and save instead are focusing on increasing their wealth and income in long term. The motive represents a deliberate decision to focus on the future. And like we say, we live in the moment. We don't focus on the future. We don't think about inflation. And right now, BPL is saying that the bills are going to go up again. When you look at your bill, it's already high. So imagine, and it's rather hot. So if people could turn on the AC, so you have to save, you have to budget. So at the end of the day, you have funds set aside at least for when these bills come, you know, unexpectedly. And then, like I say here again, people save just for track record. Like I was saying, if you want to actually get a home, you save consistently. And then some people save because they have a credit card and they say, you know what, I'm ready to pay this credit card off, so I need to save so I could just take this lump sum and pay the card right off. Then some people save for old age, you know. We know national insurance don't pay you that much money. I told y'all before, the most you can get out of national insurance up to now, if you retire, whether you make $100,000 a year, the most you're going to get when you hit 65 and you retire, and you're only going to get 2,000, pay up for 2,000 contributions, and the most anybody can get is $3,270 something dollars. So that's the most you're going to get. So you have to put savings aside for hard times and when you retire. And then, like, some people have personal pension, and so every payday we invest a certain percentage. Like, I know where I worked before, you invest 5%, the bank matched the 5%. And if you stayed, they tell you with 10 years, you got what the bank put in and you got what you put in. So people save for that. And so, like I say, savings is something that we all need to do. Savings to fulfill a contract. If you have a life assurance policy or a personal pension, then you have a legal obligation to put a premium. Right. So we know when we have pension, like I just said, we have to put a certain percentage every month comes out our salary. For persons who have pension, you know, who companies have pension, you have to put a certain amount in every month for your pension. Is your pension 5%, Mr. Price, or y'all can put more?
I believe Marks is 6%.
Oh, okay, all right. And y'all have to be there for how many years for the bank to match?
I believe we match right away, you know.
Whoa, huh. I had to be to the bank for 10 years for them to match. When they left, I left with what they put in and what I put in, but I had to be there for 10 years. When I worked at the offshore bank, I think it was 5 years at the offshore bank here, but 10 years to get. And if I put in 50, they match my 50 after 10 years. I leave with that. Boy, I know one thing, Scotia changed their pension policy now because boy, before I had some persons who was in my class, and when they left Scotia, boy, they walk away with plenty dollars. But I think Scotia changed the plan now. When you reach what, 55? You have to leave. I know they had some stipulations where you had to leave before a certain period for you to be able to get your pension. Or you wouldn't know about that, Mrs. Pear, Mrs. Price?
Oh, yeah, you say plenty people walked away with plenty money?
Oh, yeah, much money.
Yeah. Yeah, not no more. It ain't like what it used to be.
Man, people walk. One lady was in my class. The woman must have walked away with $1 million. I was like, wow. Yep. Because they were there long, and they was in that when they had that other pension. Same thing with I think Central Bank was the same way. So everybody they change everything now. Yeah, because a lot of people walk away with a lot of money from Scotia and Central Bank, but I think all of them now change their pension policies. Yeah, because some people, I know if they didn't leave at a certain time, they would get their pension every month. They couldn't opt to say, I want my lump sum pension. And I think that's what somebody was telling me was happening at Scotia. Yeah, that was just something someone said who worked there. Children often have savings account open on their behalf, like we talked about that before, where a parent at Scotia, they could sign, and when the child reaches 18, they can take it over. As they become students or begin to work, they have expenditures that they must meet, and they may draw on savings for this purpose. During an individual working life, different types of savings become sensible, such as pension, life insurance, together with investments in a home. Yes, investing in a home is fine, but today, how many young persons are able to save enough money, get a mortgage to purchase a home? How do you all feel about that? Y'all young persons,
Not much at
married?
all.
Huh?
The majority of
Very
my
much.
customers are between the ages of about 40 and up.
Yeah, because it's very difficult for young people today to get a home. Because when you're going out there to get a home, the first thing, the property is cost so much. And when you don't get the property, then you got to go get this plan to build this house. And nowadays, the contractors charging you, they charging you by square footage. So if you live in that bougie area like West Wind or West Ridge, Southwest Ridge, every area have their price per square footage. So some people could have to pay, the contractor say this is your estimate, this is what I charge per square footage. And so you could see paying $200 per square foot. So you could imagine you building one house with a 3-bedroom, 2-bathroom, all these little things. You know how much money that is? And as I said, and then building materials has gone up. It's no longer, everything has gone up. To purchase a piece of plywood now, last time I looked, it was $60-something just for regular plywood. So if you're going to get a finished plywood to make a cabinet, that must be $90-something. So like I say, building a home is very, very expensive. And not only that, and now the ones that the bank even have repossessed, there's so much work to be done to them. It's like, how am I gonna make it? The younger persons, unless they get, like I say, older people save to help their generations, like help them get ahead. Like say, okay, honey, I will give you the deposit for we will give you the deposit as a wedding present for your home. How many Bahamians, how many people could do that? Some can, or parents who be like, okay, I will help you. Or parents who have a piece of property and who would say, okay, I would sell it for this, but I'll sell it to you for this. So that's the only way nowadays young people able to actually survive. And don't talk about renting, because nowadays a 1 bedroom in a good area costing you $1,300 a month, and you have to pay your own light bill. So it's kind of really hard for young people to really get ahead and save unless they have the support from their family, or like parents who save to make life better for the children who's there to help them. Other than that, trying to struggle and to do it on your own is not easy. But like I say, trying to get the young children to start saving from young, to let them know that to get things in life, even to say, we want to go on this little vacation, you want your spending money, okay? So this is a little piggy bank. You need to put a certain amount. And when they get a certain amount, just take them to the bank, where you open, like a Scotia would open an account for them with the parents signing and say, okay, send them to the counter, show them how to fill out the form, or even with the ATM card, try to introduce them to that at a very young age. So, they won't be behind the 8 ball. Then we have type of credit accounts. And when we say credit accounts, these like overdrafts, credit cards, personal loans, mortgage loans. So we know loans are, like I say, banks lend depositors money at a higher rate than they're paying the depositors to their loan customers. So loans, that is credit accounts, are rather simpler to categorize than savings. The motivation of personal borrowers are essentially twofold: to purchase an asset, or in participation of income. Like if they have a shortfall, asset purchase cannot always be financial, but current income or cash flow. But loans repayment may well be within an individual scope or a business ability to fund from monthly income or profit. Yeah, because say you get a mortgage loan and you get a mortgage, but you purchase a triplex. So Miss Price, when a customer wants to purchase a commercial like a triplex or a duplex, do you take into consideration when granting them that loan, do you take into consideration any percentage of their rental income?
No, not until they own it, because the bank looks at it as they can use the rental income on the application if they don't own it yet. Now, if they want to do an equity takeout, if they want to come back, we'll take the rental income into consideration.
Okay, but when they're first coming for it and they're building a duplex or a triplex or purchasing it, their rental income is not used. Because I know before they would
No.
use 50% of it. Okay, so not until they want an equity loan where y'all will then use how much percentage of it?
Only 65%.
Okay, alrighty. So a lot of persons I know, like I said before, I know they used to. Do y'all give loans to brothers and sisters, mothers and daughters, mothers and sons? Mortgage loan?
Yeah, we do.
Okay, because I know some banks don't, because they say, I had situations where the sister get married and say, oh, I get married, I need my own. And so they want to sign off, and yeah, mothers, sons get married, daughters get married, leave the mother alone, having to struggle to sort it out on their own. So the types of credit accounts: mortgage loan, typically for a home purchase, secured on asset purchase, runs for 25 or longer. How long you say your loans is? 35? Miss Price?
30, we could go up to 30 years.
Okay, 30 years. But you said persons can get loan even if they old?
Yeah, it doesn't matter how old you are.
Gee, so somebody who's 55, they come to you for a loan, for a mortgage loan?
Yeah, as long as they could afford it. Even if they just use their pension, we'll accept pension as long as the monthly pension could afford the mortgage.
Okay, right. Personal loan for assets purchase, example, a car, fixed monthly repayment. Right. You know, that's all that's go on in our country, consumer loans, consumer loans, consumer loans, everybody giving a consumer loan. Credit card, which we call a revolving credit. So a set credit limit and demand minimum monthly payment. And you know, a lot of us, we get caught in spending too much on the credit card. And then when we see that finance charge every month, we'd be like, gee, this finance charge is out the door. But because people don't understand unless we pay the full balance off, we charge that finance charge every month. So that's why a lot of persons who could afford it use the card, but when the payment day comes, they pay the full card off, which is good when you can do that. And then we have overdraft facilities. You know, we have overdraft where we can have persons can use equity in their homes and get an overdraft on their checking account to do certain things, to fund a business, fund salaries. Then people have overdraft where they just get an overdraft in case something happened that, oh, I may fall short and I need this extra. So they'll say, okay, I want some overdrafts are secured and some are unsecured. I guess to have an unsecured overdraft, it has to be, you have to be a good customer of the bank for them to actually give you unsecured overdraft facility. But we have banks that do it. They get unsecured overdraft facility. And then some banks request that you have a term deposit, or like I said before, equity. You get an equity mortgage where you can use that to say, have on your account for an overdraft facility. So yeah, but people get overdrafts and sometimes they don't pay it. And the one thing people don't understand with overdraft facilities, you also charge annual fees, you charge monthly fees, extra fees for the account being overdrawn. So the bank make their money by charging you fees. Conditional purchase for assets allows buyers to pay deposit and then agree a loan for a fixed term amount. Only after loan is repaid is ownership of the asset transferred to the borrowers. And like we know, if you get a mortgage, you get a car, right off the bat, you're going to see on that mortgage, insurance on that mortgage, loss payee is Scotiabank, loss payee is Fidelity, loss payee is Commonwealth. Even with a car, loss payee is the bank. Until you finish paying for that car or that house, the loss payee on everything, insurance, if something happened, the house burned, the bank is going to get paid out first because they're loss payee. The car insurance, something happened, you're not going to just walk away with that check. The bank is going to be paid out first. Unlike like we talked about when it was the Hurricane Dorian and stuff, you know, a lot of people lost, a lot of people had to do refinancing because there was no more car, you know, and so the bank had to do refinancing with them because a lot of cars were in third party. So third party, you know, you only get money if you hit somebody's car, you can fix the person's car, even if it's in yours. So only if they had comprehensive insurance, and we know majority of cars in the country is right-hand drive. So a lot of them in third party. Leasing for asset purchase. Effectively, the rental of assets for a specific period with option to buy asset at a predetermined price at the end of the period or otherwise to hand asset back. And so we know people lease properties. People say, okay, I want to set up a shop here, so I want to lease a property for, hey, a year. And so people do leasing like that. And then to remember, we go, people lease tools, you know, I'm leasing a tool from someone, and, you know, nowadays you just have to pay a deposit down. And then if you don't damage anything, when you go back, you get your deposit back and you return the tool. Common relationship to cars whereby leasing companies and some companies lease cars to like businesses. So you'd see like government leasing cars where they don't actually ever own the car. They just continue to lease the car from different car companies. Business loans have similar characteristics to personal loans, personal finance, vehicles, but sometimes the terminology is different. A repayment loan to which interest is added monthly and on which a regular repayment is agreed look the same as a mortgage loan, especially where it is secured on a property. Typically, however, it is called medium-term loan. Much personal borrowing is via overdraft or credit card, and in most cases, the second motivation explains why people request credit from banks. Individuals will often have expenses such as rent, living costs, travel, which they must fund before they receive their monthly salary. Yes, and as we know, in a lot of people around the world, we live for that good payday to payday. So if I can't pay that rent until I get my pay, I can't pay that car loan until I get my pay. And that's why you'd always hear them say, whatever you do, try to always save for a 6 months in your bank account. So if anything happens, you have a 6 month savings. But it's really hard to do it because the rents are expensive. Y'all taking classes that expensive. Then you have kids. It's just so much things. BPL is gone up, water and sewage is there, cable is there. It's like everything, gas is there, groceries. So, it's really, really hard. Even when and I always thought when two persons, when you get married, boy, your salary coming, my salary, boy, we should be rolling in the dough. But it don't be that way. It's always that, boy, we have two salaries, but expenses just seem to keep rolling in. So it's like I said before, it's really easy. It's not easy for young people today, starting a family and having expenses and trying to get a home. It's not easy at all. So that's why here again, family support is very important. And like I said, when you get a mortgage loan or a consumer loan, there's so much different fees involved. You have commitment fees, you have administration. It's just so many fees, government stamp, this fee. So by the time you get that loan and when they say to you, okay, now you get the loan, you have the property, but hey, you have that closing costs. Now you have to find that money for your insurance. You have to find that money for the lawyer. You have to find that it's just so much things that it's so much things that you have to pay. So in getting a mortgage now, your closing costs could be up to $30,000 just to get a home. And how many young people today, even old people who've been working for a long time, how many have that money aside to be able to just pay? We don't. Home mortgage loan. One of the most common example of asset purchase is via loans and home purchase with a mortgage loan. This is popular in the UK and the United States as a result of positive cynical attitude towards owning properties. But it is not an attitude that is shared in all countries. Like they say in Europe, that's not something that, is an example of long-term property rental, a factor that the monetary authorities also have to take into account. In addition, the interest rate, two key parameters are important in comparing home mortgage products, both between different providers and between different countries. So every country have a different take on the loans. They say here the loan value ratio and the maximum loan allowed based on the applicant income. But we know here too, we have a certain percentage that the debt service ratio, there's a certain percentage that the bank will lend customers according to their debt service ratio. So here again, we come back to the crisis, and we know when the crisis, financial crunch crisis came, it created a lot of issues when it came to lending. We in the Bahamas now, we're doing much better because the central bank is, singing a lot of praises of where we are now to where we was when it was COVID and Dorian. So they're saying that a lot of people getting mortgages, getting loans, so the country is quite liquid now. And then we have a lot of tourists coming in. So we're doing quite fine. All we need to do, I guess, as individual is try our best to try to save as much as we can, because in anything, rainy days come, and so we have to try to save or invest in tangible stuff. Not again on a vacation. I don't think I've ever borrowed money to go on a vacation. I'm going on a vacation. Oh, I'm getting married. Oh, I'm doing this. No, I was always a kind of a frugal person, so I never had a wedding. I just got married. I went to the family islands, and I just rented my dress. I did everything to my hair. I didn't have a wedding, but when I reached the church was full of people, and I took pictures, and my pictures was $50. That was years ago. And so I'm the kind of person, like how people believe in having funerals and weddings. That's just not me. I told my children, whenever I die, if I die today, you cremate me tomorrow. Cremation, the government can give you a couple dollars. You could use that to cremate me. That's me. You find a lot of times people come to the bank. There's a lot of people come to Scotia, Miss Price, to borrow money for a funeral.
In the past, I've had people come to me for that, but not that often.
Do you ever discourage them? A funeral, person dead. I can never.
That's a touchy subject. So, no, I don't discourage them, not for that reason.
I mean, I've seen people. I know one situation, the person died, and government is give you a year salary. And they went to the government and they say, well, we need to have a funeral for her. So we need some of that money that she leaving, that year salary, we need some of that. And believe it or not, the people got clothes made, everybody dressed alike. She wearing the most expensive dress to go down, the coffin. Me? Never believe in them things. I always say, if I die, and I tell my children, if I die today, bury me, cremate me tomorrow. Y'all don't need to. Y'all can throw my ashes in the sea. Y'all don't even need to have a funeral. Y'all could go right to the like rescue funeral home and just go right there. The preacher come and he preacher and say ashes to ashes, dust to dust. That's it. You need to invite nobody to the funeral. I have 3 sons. Only y'all 3 need to be there. If my sisters them still alive, then yeah. But I never believe in them things, and it just bothered me that people is, because funerals are very, very expensive. When my mother died, my funeral was $12,000. I had to take that out of my account to bury her. I was like, how do people? I could never see me going to the bank for a funeral. Never. I couldn't do that, because guess what? That person done dead. I ain't doing that. How do y'all feel about that? Mr. Price, you'd want Mr. Price go to, if you don't have no insurance, you want him go to the bank to get some money to bury you?
No, I've already told him if anything happens, just cremate me.
So I'm happy that some people believe in what I believe in, because my mommy said if I cremated her, she would never let me rest. That's the only reason why I bury her, because I don't really tell her I was cremating her. What? I don't believe in that. And I tell every one of my children, because they're not, two of them, they were married, they divorced. I said, I have your insurance. You don't think I'll be spending that on you, on any funeral? I'll be cremating all of yours. I just don't, I'm just a kind of person who don't believe in weddings, don't believe in, I go to the justice of the peace, to the pastor, hey, marry me, that's it, me need nothing else. That's me. I frugal because I guess I grew up very hard, and so I'm very frugal. I don't spend money if I don't have to. Yeah, I don't. Yeah. Then we talk about the interest rate. Okay, we see normal interest rate takes into account a number of factors that can be. It takes the rate, the real interest rate, the pie, the inflation premium, the L, the liquidity premium, then it takes the risk premium. So then we have the different types of rate. We have floating rate, tracker rate, then we have fixed rate. We know some mortgages, I know sometimes the bank will say fixed for a certain period. Do you have that at Scotia, Mrs. Price? Where you'll have the rate is good for a certain period and then it changes on a mortgage or on a mortgage loan?
Sorry, I didn't hear the question.
With the mortgage loan, do you have just a fixed rate for the full term of the loan, or at a certain period the rate could change?
The rates are always, mortgage rates are always variable, so they're tied to prime. They'll never change unless prime goes up or down.
Okay, all righty. And so when y'all give a customer a mortgage loan, do y'all explain that to the customer? That if prime go up or down, the rate can change? Pardon me?
I explain it. I don't know. I don't know if the rest of the loan officers do, but I explain it to my customers.
Yeah, because you know, if prime go up, they looking at you, why my rate going up? But you know, like I said, we talked about earlier, we don't read the fine prints. So we don't read the fine prints, yeah. And then here we talk about the non-interest based products, like insurance and investment. We know insurance, we ain't getting no interest on that. Investment products. Now, when they say investment products, I guess some investment products, they're saying you don't get any interest on it. But I know with mutual funds, you get some returns on it, according to, like I say, if you have a risky or moderate or just, no risk at all. So when you look at your returns on them, they're always different, because like you could have somebody who's been in an organization for 5 years and you've been there for 10, but because they took more risk and you didn't take any, they can leave the company with more money than you in their pension because they invested in more risky securities. Payment service. The payment service is a basic account relationship, but takes a different structure depending on the territory, which we'll see further in chapter 10, they said. International trade service. These specialized services are aimed at financial and physical risks involved in international trades. Even the smallest business can have import and export issues. Risk management service. These covers financial risks, generally such as interest risk or exchange rate fluctuation. And then you see down at the bottom, they have a table with ratio on non-interest income and total income. They're talking about the different countries. Russia, the ratio 7.9, 79.64, Singapore 57. So these are the ratio of non-interest income to total income. And then we further go on to talk about insurance product. We know with insurance product, they have different type of insurance. Universal, they have insurance where, term insurance where a lot of banks try to encourage customers who get a mortgage for say 20 years or 30 years, try to take out a term insurance that match that term of your mortgage. So once your mortgage is paid off, the term insurance also is done, but term insurance is less expensive than taking out a universal life insurance or straight life. So term insurance is cheaper, but it ends when your mortgage ends. For some people, so a lot of times they say, you take out a universal life insurance, it's you get dividends, you get cash values. So hey, some people take that out even though, and as long as you take out insurances when you're young and you continue to pay them, it's better for you because you're still getting cash returns from them. You get, so cash values from them. So, and then you can still use them when you're getting a mortgage. So you can still use it. And then some go for a certain period that you could cash it in and get returns on it. Any questions, any concerns? My mouth tired now. Any questions as far as we are?
No questions.
Okay, I need somebody else to pick up. Oh, I kind of a little tired reading. Okay, can someone read from where it says there are a number of risks that, hold on, let me go back. Insurance products, page 85. So only 3 of us here, 4 of us. So volunteer, somebody can read.
Where exactly you want us to read from? Insurance products?
Insurance, yes.
Retail banks often exist as part of the universal bank. As we now see in chapter 2, and offer investments, insurance, and pension products on behalf of bank-owned, that is tied provider. Where retail banks do not have this advantage, they can act as brokers offering advice and arranging policies with outside providers. In a risky world, individuals and businesses need insurance to mitigate against the financial loss that would arise if certain events were to occur. The business of insurance is, in effect, an extreme form of financial intermediation. Rather than the deficit and surplus units, that is, borrowers and lenders, at which we looked in chapter 2, there is a whole population of insured entities and a smaller population for whom the risk or loss will become real. Note that there are 2 terms found within this market that can often be confused: insurance and assurance. The difference is that insured events may happen. For example, I may become ill, while assured events will happen. For example, I shall die eventually. There are a number of risks that are insurable, but from the perspective of an insurance company or bank, these must have certain features: measurability. The actual loss that might result from a risk event must be capable of being quantified in financial terms. Chance, there must be some degree of chance, of random probability about the risk. Insurance companies will estimate the likely risk for different age groups, car or life risk, or different location, flood or theft risk, and based and base the premiums that they charge on the probability. Commonality. There must be a sufficiently large pool of people or companies sharing the same type of risk. However, actual loss should be independent, that is, subject to chance. Insurable interest. Only those who will suffer loss from a particular risk are able to insure against it. It would be unthinkable if unconnected. Sorry, it would be unthinkable if unconnected parties were able to insure other lives. Imagine if an investment you were to insure the lives of people boarding a particular ferry in the Mediterranean. Public policy. When the risk event is considered to be a crime, it is against public policy for insurance to be valid. In Cleaver versus Mutual Reserve Funds Life Association, 1892, 1QB 147 in the UK, the courts prevented Mrs. Cleaver from collecting insurance proceeds following the death of her husband because it was she who had killed him.
Right. So as we see there's certain things that you can insure for. And like we know with banks, banks, even when they get robbed, they're insured for that. When fraud, they're insured for those stuff. So banks are insured, just like insurance companies, like insurance companies are insured too. So they're insured abroad. So a lot of times you may say, Jesus, so much people die, but the insurance company are insured for all of those persons that they have insured. They have insurance with other insurance company abroad. So nobody loses. It's a win-win situation. What I want to do too, I want to look at my chapter and introduce something to you that talks about the different type of customers. I will make sure y'all get a copy of my chapter because I want y'all to look at the different type of customers. When I say the different type of customers, what do you think I mean by that? We had a different type of accounts. Now we're talking about a different type of customers. Okay, the different type of
You
customers.
mean low risk, high risk, like that?
No. The different type of customers are like we'd have a sole ownership account, like a person who does everything is the sole owner of an account. We'll have a joint account. We'll have a minus account. We'll have a sole trader account. We'll have a partnership account, a company's account, a trustee's account, clubs and society. So this is something I think would have been in another chapter, which I didn't touch because I combined these two chapters together. So type of customers, the sole account, personal account with one account holder. Others may be allowed to sign on the account, but a sole owner, he is the only one. This is the type of account. Its key features is a personal account with one holder. Then we have the account liability. So the sole owner is liable by himself for anything that goes wrong. Anything, he is liable for it. With a joint account, joint account is me, you, and a personal account where it's two or more sharing the account. And both parties are liable because they're joint. Then we have minors, which we talked about before with Mr. Price. We talked about parents signing on it. So the liability, the account holders or the guarantor, depending on the circumstances. So parents until the child is 18 is liable. Sole trade, business accounts, others may be allowed to sign on it, but it's totally, we'll have like sole trader trading as those trading as accounts. So, it's my account, but I'm trading as Pet Unlimited, but it's my account the business license is trading in Pet Unlimited, but I am the actual owner of Pet Unlimited, but I'm trading as Andrea Smith trading as Pet Owners Limited. Then we have partnership. Partnership is just almost like a joint account, but a partnership account is where both partners are liable for anything that happens in the business. Business where two or more people join together to run a business with a view to profit. And we know in a partnership, we share profit. So some people, when they start up the company, and when they talk about partnerships, some people will say, okay, I invested more, so I have 60% of this company in the partnership. You have 40, or you have 20 and someone else have 20, but that's partnership, but all the partners take full responsibility for liabilities, anything that happens. Companies, we know companies have to be incorporated. It's a limited company, so there's different things you have to do, memo of arts, articles of association. So these are things, you have shareholders, you have directors, you have legal documents and stuff that has to be signed. So companies are limited companies, and so they have to be incorporated with members, directors, secretaries, treasurers, all of those. Then you have the trustee account, business or personal, where funds belong to a third party and it's in trust for a beneficiary. So, you know, a lot of times we have like, you'd have like a RF, you'd have a Royal Fidelity, excuse. You'll have a Royal Fidelity or Leno. They're acting as a third party, they're acting as the trustee for, say you have a child who's very young and you want to ensure that funds are given to that child, because you know a lot of times we have parents who die, one spouse is left and the spouse knows that the money is left to put the child through college, but the money left to the spouse, so the spouse don't care. The spouse gets married again, forget that the child has to go to college, takes all the money and spend it on his new family, and the poor child can't go to college. So things like that happen. Then you have clubs and society. It's not like a cooperative bodies. It's run by committees, and like you have like the girls' brigade, the boys' brigade, different stuff like that. You have these are the committees, and they are actually committee members, so they're not incorporated. And so we'll say, like I said, a sole owner he has the responsibility by himself. Then you have joint accounts, and then, you know, a lot of joint accounts, we have joint accounts with right of survivorship, just like an insurance. Some people take out insurance where they say, okay, this insurance is taken out for me and my wife. Whichever one died first, the other one gets it. So joint with right of survivorship, just like I say, joint accounts, you have joint with right of survivorship. And like we say with minor accounts, we know that an adult should be signing. And some of the advantages of a sole trader, many advantages are summed up under the heading control. You have full control over the daily and strategic decision making. There are far less red tapes and regulations than a limited company. You have no staff, staff to manage or pay. Starting your business is quick and easy. All financial data is kept private. No annual accounts to be prepared as a sole trader, adding income and expenses to their tax return. So we know with a sole trader, your advantage is you own the company. You don't got to worry about staff. You can make your own decision, and it's a very low cost. Some of the disadvantage of being a sole trader, negative aspects of operating on your own, and that everyone else perceives you as small. So, you know, if you say, oh, I have this little business, just me one, people look at you. Some people judge you by saying, oh, he just tried to open one little business. But like I say, it's yours. you know, and today, in today's world, if we do due diligence by, you know, going out there and actually seeing what the market, what is needed on the market, and, you know, put a portfolio together to say, you know, these are the don'ts and the pros and the cons. A lot of business people will make it more, but a lot of times people just decide that I want to open a business, so or start a business. So they just go ahead and they do no kind of marketing survey, nothing what is actually needed, you know, because 10 dress shop already on that corner by you. Why you want to open another dress shop? So people don't do that. They just, everybody sometimes just want to say, oh, I have my own business, you know? So the disadvantage, you have the liabilities and the debts are all on you. So when that light and that water, everything comes, that on you. When you have to restock, that on you. It may be difficult to bind and accept larger contract. Yes. So you can't take on any large contract because it's just you. You don't have no staff. It's just you one. There's nobody to delegate to. It's difficult to scale a business on your own. You can leverage buying power due to your small size. You can't. You have to buy in knowledge and expertise if you don't have it yourself. So if certain things that you need some, you know, expert, some information on which you don't know, you have to go out there and pay somebody for it because, or some knowledge or some experience and something you need done. You don't have the staff, so hey, you have to go out there and pay somebody to do it. So that's a disadvantage to you because you still have to go out there and spend your money. Okay, partnership. Like I say, with a partnership, we know with a partnership, there are advantages and disadvantages of being in a partnership, because sometimes you can have somebody who comes and say, okay, you know, I don't think this is working out. And they say, I just need you to pay me out. What happens then? You have to pay them out. And, you know, if you're not a person who at that point, you know, if it's just you and them in partnership, you know, you have to pay them out. And what happens then? You're left probably holding some of the bills because you have some partners who just say, I ain't doing it no more. I just want my money back. And they don't even want help with whatever bill that they created. They don't want to help with it, you know? So in any business, anything, we have advantages and disadvantages. With companies, we have limited companies, so it's not as easy as getting out of a partnership, getting out of a company. So here again, all of these have their advantages and disadvantages. And companies, we know that there are different documents that has to be signed and notarized when it comes to a company. Certificate of incorporation, which is a legal document. Then we have memorandum of arts, which an association, which has to also be signed by a lawyer, deal with, be registered. So these are stuff when you want to have a company. Then we have public and private companies. Companies are divided into two main categories, public and private. Public limited companies must have shares which are capable of being transferred without restriction, a share capital for authorized amount of 50,000 or more, which at least 50,000 must have been issued. Then at least you have to have at least two shareholders. Then, like I said, we have trust accounts, which trust accounts are where we have, like I say, where banks can have a trust account for a parent, a child. So typically trust relationships encountered are executors, administrators who manage the estate of the deceased person, trustee who are appointed under a will or trust deed to manage funds for the benefit of the third party. So, and then we have clubs and societies. Like I say, clubs and societies could be a PDA, could be Girls Guide, could be a sports club, a social club. All of these are clubs and association, and they are really run with committee members. So this is an addition to what we just talked about in chapter 7. Okay. Anything you want to go over or didn't understand or need more explanation?
No, ma'am.
So y'all ready for the exam on Saturday? Any questions?
I have a question. Chapter 7 won't be on the exam, right?
No, ma'am. Just chapter 5. You don't even have chapter 6.
Okay.
Yeah. And like I say, pay attention to the multiple choice, especially for chapter 4 and chapter 3, because the majority you'll see is multiple choice from that chapter. Because like I say, there was a lot of incorrect answers on the true and false. So pay attention. Try to not just try to memorize, but try to put it in the perspective that you're able to say, no, this is not it. No, this is closer to it. No, this is it. Try, because a lot of times when we try to memorize, what happens if we still get confused, and we know with multiple choice. Well, I know with chapter 4, money, everybody did well on that. So that shouldn't be an issue. And chapter 1 and chapter 2, and like I say, you have the sheet, so it's just going over it and trying to ensure that you study. That's it, because it's like I gave you most of the questions, well, all of the questions, you just don't know which one is coming, which ones I take out. But like I say, most of the true and false, I eliminated some of those, yeah. But you'll have the multiple choice and true and false. And I think y'all should be fine. But remember, it's at best at 10 o'clock on Saturday. Yeah, well, only 3 persons was in class today, so I'm not. Did it rain over there today?
It rained.
Oh, okay. It didn't rain as heavy as the last time, I hope. Where y'all had no flooding.
No,
Yeah.
it wasn't as bad.
Oh, okay. Oh, all right. Well, like I said, it's only 3 of you in class tonight. But if you have no questions, no concerns, no questions about the exam, like I say, it's going to have an answer sheet. I've already sent it to Miss Dean. So I'm just going to send her the answer sheet. So you're just going to answer on the answer sheet. Okay. But like I say, good luck. And I will send you all chapter 7, my portion, my chapter 7, because you have the book, just to add some other flavors to the chapter, yeah, which it's not in chapter 7. Like I say, it talked about the different accounts, type of customers. Alrighty. Anything else?
No, ma'am.
Alrighty. Well, all the best on your exam on Saturday. Y'all should have your results back as long as Miss Dean gets the paper to me. She scanned them to me. I will have your exam results back by, because Monday is a holiday. So between Monday and Tuesday, I'll have it back to you so you know where you're at in your exam. And I'll put the percentage, okay? Which you get out of the 30%. Alrighty?
Okay.
Sounds good.
Alrighty.
Okay,
Okay. Good night.
good
All right,
night.
good night.
Bye.
Okay. Okay. Bye-bye.
Bye.